Hi, this is Charlie Aitken of investmentmatters.club with your intro to the investment markets overview for the weekend in the 21st of June 2019. An investment analyst should be interested in correlations and be mindful if and when they break down, just as they would be interested in a breakout by a security after an extended sideways period. Such a thing happened this week in respect of the gold price, dollar gold price that is, and the S&P 500 index, America's finest. And after effectively a sideways move since beginning of January 2018, both broke out this week over their respective highs. In the case of the S&P 500, it was to a new all-time high, which was achieved on Thursday. We continued with the theme of correlations throughout the overview. For example, under the US section, we looked at the 10-year Treasury bond yield against the dollar price of gold, and as you can see, there's an inverse relationship here. In other words, they do the opposite of each other, which has continued of late. Now, there are implications with that we expand on. We also looked within the European section of the correlation between the ZEW Economic Sentiment Index, which is a monthly survey of around about 350 financial analysts measuring their level of optimism on the economy over the next 6 months. And we've measured that against the European Euro Stock 50 stock market, and as can be seen, this is broken down, hence the question mark. And out east, we looked at the Bank of Japan's short-term interest rate, which is the green line, which they left at minus 0.1% this week, against the Bank of Japan's balance sheet, which is this red line, and we can certainly see an inverse correlation there, added to which we put in blue the Nikkei 225 stock market index, and as you can see, they are fairly closely correlated, hence our title here, no financial market manipulation here then. They call it support, despite borrowing ever more money to purchase Japanese government bonds, stock, exchange traded funds, and real estate investment trusts. Either way, the Bank of Japan was just one of 3 important central banks this week who met and left interest rates on hold. The most important one, of course, being the Federal Reserve, which left rates at 2.75%. However, the press release included the following. It dropped a promise to be patient in adjusting rates and said that it would act as appropriate to sustain the economic expansion, which the market read as bullish for both stocks and bonds, albeit that logic would actually suggest that they have become extremely concerned about the stall in economic data and their balance sheet debt levels, now at record multiples versus assets. The Bank of England, not shown, but also left their interest rate on hold at 0.75%. The overview includes our normal comment on the commodity complex and currency and bonds. Here's just a snapshot from commodity performance during the week, which was up across the board for precious metals, and indeed the oil price, which went up the best part of 10%. Against that, the US dollar came off around about 1.4%, hence that aided and abetted the price of gold, that's for sure. And we concluded with comment on the US housing sector, which had mixed results during the week. And this particular chart homes in on US existing home sales, which actually perked up in May advancing by 2.5% following an unchanged April. But we're more interested in the fact there that the natural correlation between sales and house prices, in this case it's the Case-Shiller 20 City average house price index, and as can be seen, it started to break down from early 2018, which puts another question mark round about here. We'll find out a bit more about this next week, as the data being released next week includes the Case-Shiller, the latest Case-Shiller 20 City information. Well, that just about wraps it up for the overview on this week's overview. Enjoy, if you're a subscriber, enjoy the free taster if that's what you signed up to. Please be aware, if you're interested in this service, we do have a mid-year special on at the moment with a massive drop on the normal price, but there's only a short window available until that ends. And with that, I'll take the opportunity of saying goodbye and save investing.